Joining us today is Joe Davis, President and Wealth Advisor at Stonebriar Wealth Management. Joe, always a pleasure to have you. Welcome back.
Thank you, Jonathan. It's a pleasure to be here.
So we had you here Q2 and Q3, and both times we were talking about market volatility. Now it's Q4, and it seems like the market is even more volatile than ever. With all the moving parts, how can investors tune out the noise and realistically manage their expectations from here?
Well, you certainly said it. This has been a volatile year. There's been a ton of noise. But broadly speaking, this market is very uncomplicated. The global economy has an inflation problem. Whether you're buying a new car or a pumpkin, we've all experienced it. It's in the data. There are signs of inflation peaking, but it's not conclusive enough. And when you have an inflationary environment, you're susceptible to exogenous shocks. And we have had our fair share of shocks this year, as you probably are aware. We've had the Russia-Ukraine war. I mean, a terrible human tragedy. It's caused commodity prices to spike. We've had the zero COVID policy in China, the lockdowns. Sporadically, without warning, one of the largest economies in the world shuts down with zero output for an extended period of time. And then most recently, PM Liz Truss in the UK, there was a completely unforced error that was completely avoidable by announcing her mini budget. And it's good to see, yes, the Chancellor of the Exchequer outed in less than 2 months, but there was pretty significant damage done. So at the core of all these different shocks, it's inflation. And looking at the CPI data month over month, looking for a softer number for the PCE index, the preferred index of the Fed, we need to see a meaningful decrease in inflation, and we just don't have it. And until we see a softer number in CPI, the Fed is going to continue to be hawkish. And they have proven to be the most hawkish central bank in the world, and surprisingly so. It's amazing where we've started and where we've come in a very short amount of time. But as an investor, it all comes down to don't fight the Fed, listen to their rhetoric, listen to what they're saying, and it's an inflationary problem that we have to focus on.